Welcome to the Realty Rundown, the podcast that cuts through the noise of the real estate world. Your hosts, seasoned industry experts Nick and Nate, are here to guide you through the entire process. Each week, they're breaking down the latest market trends, decoding complex jargon, and sharing insider secrets you won't find anywhere else. Whether you're buying your first home, selling a property, or building an investment portfolio, we provide the clear, actionable advice you need to make your next move your best move.
All right, everybody, welcome back to the Realty Rundown from the Nic Wyse Team at RE/MAX Results. I'm Nic Wyse. Join me, as always, my co-host, Nathan Schwartz.
That's right.
And there's no boo sounds. I told Nathan I figured out how to do sounds today, and I was going to boo him when he got introduced, but I did not do it, Nate, I promise.
Thank you for your mercy. Thank you.
That's right. Best part is he can't hear it when I do those things. So, I could literally be
I wouldn't even know if you're doing it right now.
It might be. Okay, so we're already derailed 30 seconds. Today's episode is all about timing, of which we just had terrible timing, but it's going to be talking about how even a small shift in mortgage rates, we're talking about mortgage rates and how a small shift can send buyers basically running back to the market. So breaking down what's behind this latest drop, why contracts to buy existing homes have jumped, and what that's going to mean for our buyers and their sellers as we move deeper into the fall season.
Yeah, so this one hits home literally. Some recent reports say mortgage rate averages have crept lower again, and that's giving the market a little bit of spark. But let's get into what that means here on the ground. So I'll get the ball rolling for us, Nick. But that report said mortgage rates ticked down slightly after being stuck about 7% for much of the summer. Why such a big reaction to such a small move?
Yeah, I think we kind of saw this coming, like anything was going to create a little bit of a burst. And really it's because affordability has been stretched to the limit already. So rates easing even just that quarter of a point, it means that real money is back in buyers' monthly payments. You know, according to the data, essentially the average 30-year mortgage fixed rate was down again this week. So even those small shifts are enough to boost contracts for existing homes. And it's really because buyers are watching those rates like hawks.
Yeah, and it's not just about payment comfort. When buyers see rates trending down, it gives them confidence that maybe we've hit the peak, and that psychological shift brings people back to the table.
Yeah, exactly. Psychological is the term. That's exactly what it is. We've got pending home sales that are rising as these rates pull back. So even though inventory hasn't changed much, demand has definitely responded, and it was immediate. We're still far from having a flood of new listings coming back on the market. You know, and that's one of the big problems is obviously rates coming down certainly doesn't mean they're down to the 2.85s and the 3.5s right. That a lot of folks have locked in. But it certainly proves also that people haven't given up, and then they're just proving to be very rate sensitive.
Yeah, and sellers are feeling it too. When rates dips, showing activity picks up fast. We've seen it in our own listings. Phones have started ringing again.
That's right. And I have an image, real life representation of how that's going to look. So you folks at home get to see this. Nate doesn't get to see anything until it goes live. So he's in the dark.
That's right.
Let's go back and watch it.
Well.
That's not cool. Getting booed by the people right now. All right. Bad Nate. All right. So,
sorry, guys. I'm sorry.
I know. Get with it, man. Okay, but let's remember, guys, so most buyers today aren't exactly looking for a deal. There are more of that. You know, I think, Nate, you're probably seeing that with some of your buyers out there. They're willing to offer a little bit less.
Right.
It seems like what they're really looking for is stability. They want to know that they're buying at a good moment, not necessarily the bottom of the market, but a good moment. And, you know, having those monthly mortgage payments that feel more manageable is causing buyers to jump back in.
Yeah, exactly. Switching gears a little bit, but let's talk about how people can take advantage of the kind of rate movement that we've been seeing. What's your advice?
Yeah, so step one is stay pre-approved. You know, as we always say, if you're thinking about buying a home, get pre-approved.
Yep.
But a lot of people don't realize that those pre-approvals are limited. Some of them last 30 days, 60 days, most of them for 90 days.
Yeah.
But that means you got to stay approved. So if you're working with a lender, have them update your pre-approval. Basically, anytime rates change. You know, if you're one of the hawks out there and you're watching rates and you see them move a little bit, talk to your lender and say, hey, where am I at now? Did that take me down a little bit too? And get your pre-approval updated. And then step two, just be ready to act fast. We're seeing this more and more and more where our buyers are saying, hey, we want to go see a home. We're out of town for the next few days. We're going to go next week. then that home sells. Yeah, these small dips open up doors for more buyers. So you have to be aware of that. Your competition is increasing if you're looking at homes right now. Just be ready. Be ready to move quick. Step 3, don't try to time it perfectly. I've seen this, and I've harped on this in past episodes. I have too many times seen people who are like, we want to wait till it's really at the bottom, and then those little dips come and they go, and it goes right back up, and they've missed their opportunity. So if the payment fits your budget, and if you love the house, make the move.
Yeah, and a little side note, while you're waiting for rates to drop, real estate prices are likely still going up. So may as well buy when you're ready.
Yep.
But anywho, besides that, what do you have for sellers?
So it's really the same story, just staying market ready, as we call it, having your home ready. A lot of folks just met with some wonderful people today who are looking with Nate. They're getting more and more excited. They're getting closer to, knowing what they want. So when they see what they want, they're ready to jump on it. So my job now is to get their home market ready. So as soon as they find something, they write that first right contingent offer. Boom, we're ready to go. We're going to try to have pictures done. I did the floor plan scan today that we do, Nate. So everything's ready to go. So when they're ready to buy their new house, we're ready to list their other house, and they don't have to risk so much, losing the new house that they want to buy, because their house is going to be ready to hit the market. It's going to be priced right. It's going to be ready to go. So when we have these rate slides and buyers come back quickly, it's these best prepared homes that get the most attention. So really, right away, that's your time to shine.
Yeah. So basically, this is like gas prices. The second it drops 10 cents, everyone suddenly remembers they need to fill their tank.
Yeah, buyers do have that same reaction. It's like fill up the house tank, quick before it goes back up. It's absolutely true. There's even apps out there for that kind of stuff, right? Like, hey, prices of gas went down. Go. It's cheaper over here.
It's very true. Well, I'll sum it up for us, but mortgage rates are finally trending down again, like we discussed, and buyers are responding. Even small drops, a quarter point here, quarter point there, it's noticeable, and it's going to it affects affordability and confidence. For buyers, that means stay ready. For sellers, keep your property sharp and show ready. When the window opens, be prepared to move.
Nate, I think that's good news. Let's see how the people feel about it.
There we go.
Clapping for you.
I just assumed they're clapping for me. I hope they're not booing me.
There's no more boos, just that one. Just the one boo, and then very rejoiceful.
All right, there you go.
Well said. Good summary, Nate. Can't say it better myself. So, guys, we're going to call it there. That's episode 40. 40 episodes in. Hey.
There we go.
40 episodes of the Realty Rundown. Guys, if you're thinking about buying or selling, give us a call. We're going to help you navigate all the numbers, all the timing, all these things we talked about today. We're going to take care of it for you so you don't have to worry about it. Remember, Nick knows. Call us. Get your wise replies.
That's right. Thanks, guys.
We'll see you next time.
And that's a wrap on another episode. Thanks for tuning in. We hope you had as much fun as we did. We love sharing real estate insights, but as you can see, we also love to have a good time. This energy and passion is what we bring to every client. Buying or selling a home is a huge deal, but it doesn't have to be stressful. With the right team, it can even be fun. Ready to make your move? Let's connect.